Good day, this is Graham Bibby here on the 13th of February 2014, and I thought it's time for a market roundup, a bit of an update, and what a few days it's been. As you know from my last update, markets were breaking down below several support levels, and with that, a lot of our undervalued strong earnings growth were also breaking down, so we did raise significant amounts of cash, circa in the region of 80% for most portfolios. We didn't sell those stocks that still held up. However, in the last 4 days, the market has just turned around on a hairpin and just decided to go back above support levels, and certain stocks have actually reversed their downtrend and in some cases have gone to new highs. Some of the stocks that we didn't sell that we are still holding have continued to rise all through this fall. But as you will know, I'm all about safety first. I'm all about preservation, because at some stage these downtrends can lead into more significant downtrends, such as the global financial crisis and what happened in 2000-2003, which was the global technology crash when markets fell and stocks fell 50 to 90%. So here's a quick overview, and I think it's good to put this in picture form. This was what was happening during the month of January. Significant fall in the markets. Markets were around 16,600 and we fell below 15,500. And in the last few days we've had this sharp rise up. The only thing that is a little concern is we have this moving average above, which is declining, but we've gone above what would be this support level and this support level, which should be resistance. If we look at the S&P 500, it's a bit clearer. We were back at, you could say, the last remaining stop loss level, which was here. So we've broken it below this one, we've broken below this one, we've broken below this one, and we found support here, and we have this uptrend support level which it bounced off of. So now we've gone above this support level, which should be resistance, this support level, which would be resistance, and here we are. I'd expect some form of pullback, but we are above that moving average, which in itself is very, very positive. And the Nasdaq is even stronger. Again, we can put on here support level. This is the tops here, the bottoms. So that was 4,000. That is the last point of resistance if we're not going to 3750, and we've gone 1, 2, 3, 4 days significantly higher, above that support level, above that support level, above that support level, and above the moving average. So I would expect this to pull back a little bit and then to move up. So what I'm saying is we have moved back into the market significantly, because at the end of the day, it's about preservation, it's about being unemotional. Sometimes people get out of the market and then the market reverses. They feel they cannot go back in. But for me, it's cutting out the emotion. This is a proven system, a proven methodology, and the market's turned around, so we're back with it for whatever reason. Now, what is interesting to me, besides the US, is this is Asia, which was crumbling. Now we've risen from this bottom to this top, then we corrected and we've gone above this level. So this is an uptrend, and what I identified early on was markets that might surprise you have actually turned positive. Here's Indonesia. So this said, look, this is the ETF. So the ETF was above 36 and fell as low as below 22. That is huge, but I believe now, as you can see here, this is a new uptrend, and we've just gone above this resistance level here. So again, if I just put a few trend lines on, I think Asian markets have bottomed. That's the new uptrend. The resistance, potential resistance, which could have come through there, didn't form, and now that's a base, and we're moving up. So I think Asia's bottomed, and things like even Shanghai market it's had a strong few days there. So it looks to me as if that is in a bit of an uptrend. Now, the leading markets in Asia are Vietnam. So this bottomed out last September. It was ahead of the pack on the way down. It's certainly been ahead of the pack on the way up. It's reached a new high. Hong Kong, which was cratering at one stage, has made a significant turnaround. I wouldn't say that's a buy. There's nowhere to enter a stop loss, and we seem to be gapping up. But it's certainly into an uptrend. And surprise, surprise, I did say that I thought Thailand had bottomed out at the beginning of January, and that's in a new uptrend. That would be the stop loss point where this arrow is, and we've just gone to new highs. So that's looking pretty good. Australia also has rebounded off the lows, and I find that very interesting because, as you know, I was the leader in saying at the beginning of January that I thought gold had bottomed out. This is the uptrend for gold. This is the World Gold Mine Index, and I did say don't buy the physical. If you're going to buy anything, buy gold shares because they've actually been hammered. And look at this fall, even the index itself has reached a new high, and silver is actually outperforming gold. So the markets have gone from being in relatively negative territory to positive. This is the silver trust just trying to break out to the upside. I have a stock here somewhere that I recommended. Oh, here we go. Which is Silver Standard Resources. I recommended this at the beginning of the year when Bloomberg's asked me for a stock selection, and the stock at that time was about 650. It's 934. It's on a significant uptrend, and I think the markets are there to surprise people. So, with the tapering coming in and set to continue, you would expect the ammunition, the printing of money, which is supposed to fuel inflation, to be absent, but it's not, because I see silver and gold are rising. Steel and iron had been in a nice run since last June, and with the market was correcting, because I think they thought, okay, maybe negativity, maybe there's going to be a pullback in growth, but even that's turned up and is looking quite positive. And somewhere here, I believe I should have copper. If not, I'll find it. Hold on. Because I seem to recall that was looking very interesting. This is copper. So, it's come up from June and it's been quite volatile, but it's just gone to a breakout point. So I think overall the markets are looking a lot more interesting than they did. If I were to go to IPEG and look at things like Jazz Pharmaceuticals, which we have been holding, is just reached a new high, 159, and a number of the stocks that are and do remain exceedingly cheap, exceedingly strong growth. Salix Pharmaceuticals, one we got, you see they're hitting new highs. So we're back on the investment trail. If you're not a part of the Insiders Club now, or you're thinking of adding new monies, this would be the perfect time to do it, because we just been through a correction phase that is moved out the weak players in the market, and it looks to me as if the markets are set now to move into the balance of this month and into March on a very strong uptrend. I still like all these companies. Spirit is yet to move. We came out because we broke to new lows, but I'm watching that quite consistently. Other stocks like American Airlines, they'll just continue to rise through this year. A little correction last night. This stock has got earnings growth. The recent figures I've got just blown my mind. In excess of 30 to 40% per annum projected earnings growth by the top research houses for the next 3 to 5 years. And the PE ratio, 7. I've never seen such value in my life, and I have a lot of stocks in a similar position. So this is Graham Bibby on the 13th of January saying, if you're not a member yet, I strongly advise you to do so now. If you're not exactly sure how it works, send me your contact details. I'll be happy to speak to you. And if you are a member, this is a great time to add more money to your account, because I think we're on the next up leg in portfolio wealth creation. So this is Graham Bibby signing off. Until next time, have an amazing life. Thank you.